Hey, I'm Dan Fitzpatrick, and I wanted to go over Stericycle, and this is why. I bought some of this today. I started a position yesterday, I don't know, somewhere around here. It wasn't super low, it was somewhere in this trading range. And you could say, well, why would you do that when it was up so much? Because like from a proper breakout, at one point it was up this high, and that's like almost 2.5%. So if I'm buying this right above this proper breakout point, which would be when it eclipses here, then I'm buying around 71.50, something like that. But I'm pretty sure I bought it a little higher. And now today I actually added more. And you would say, well, Dan, why did you do that? You bought high and then you bought even higher. So that was dumb. And now you're dumb enough to show us that this is what you did. Wow, you must have a death wish. Not so much. This is why. Because I'm looking at this and I see a base that is almost 6 months in duration. That's a long base. I also see, you can't really call this a volatility squeeze per se, but this is a pretty nice channel, a pretty nice setup right here. I wouldn't buy this, but it'd get my attention. It's kind of like Baidu got my attention a while ago when it was super low, and then it ultimately, I don't know, doubled or whatever the case may be. It doesn't matter. That trade's done. And so I look at this and I'm saying, all right, well, I can't buy this, but it sure looks like something's perking up. And then you say, well, all right, I'm still not really in. It's really nice. Boom, there you go. Up until this has just had possibilities, not a whole lot different than any of this here. There was like nothing different about this. And you can say, oh, yeah, but it traded above 70. Yeah, you know what? That's like results-oriented reverse engineering. You're never going to see this unless for whatever reason you're really, really itching to buy Stericycle. You might look at this and take note of it. But let's be real. This is, boom, when you're looking to buy right here. And then today we get a nice continuation. So I had put this on the active trade list just today. I didn't have a chance to get it out yesterday. I guess that makes me greedy because I bought it. And so now that trade is up about a little between 3 and 3.5% from where we bought it. And that's kind of a high risk because the stock could pull back like 4%, 4.5% before you would really feel like, wow, I'm wrong on this. But this was my reasoning. Weekly chart. I look at the weekly chart. I see this. I see all this mess. This to me looks like it's just getting going. Like it's just getting going from here. And I'm kind of looking for a move through 80, but, I could see this, doing the sideways boogie here. But ultimately, I can see this thing running to 90 just as a function of this volatility squeeze. So it had this volatility squeeze on a weekly chart, and you can also see it really on the daily chart. Like I said, it's a little bit of a hybrid, but you get the point. And so, look, it's too late to buy it now. Third time is not the charm. But what I would suggest doing is watching this stock. If you didn't get it, I know a lot of our members did because I put this out today. But, if the stock goes up, look for a pullback, and it just depends on how deep the pullback is. What you want is you want to wait for the first move higher. That's when you're a buyer with your stop just a little bit below this most recent low. If it does this is when I will actually be adding to the position. So anyway, I just thought I'd lay that out for you so at least you can see what I'm doing. Hope you all have a good weekend. See you next week.